Welcome to ETF Wrap, your weekly digest of the top stories on ETF Stream. This week, we examine the impact high interest rates have had on ETF launches in Europe. Elsewhere, ETF Stream revealed a $13 billion US ETF has been brought to UCITS. And finally, an optimistic outlook despite a senior departure. What does the future hold for the world's largest asset manager? First, ETF launches in Europe dropped by a third last year as asset managers felt the burden of high interest rates. While 254 ETFs launched in 2023, this was down from 381 the year before. Morningstar said this came as a result of higher costs of capital for issuers. In fact, launches over the past 12 months fell below the annual average since 2008, with the cost of seeding a new ETF at a 16-year high. In addition to a slowdown in launches, 203 ETFs closed down last year from issuers including JP Morgan, Invesco, Franklin Templeton, Rise, Han ETF, and others. Consolidation in the industry also follows years of more niche ETFs being rolled out and the rise of copycat products from large issuers. These trends also mirror similar dynamics in mutual funds, which saw launches in Europe fall to their lowest level since the global financial crash. Next, ETF Stream revealed VanEck has brought its $13 billion wide moat ETF to Europe as part of a double launch. The firm's flagship ETF captures 50 companies that Morningstar believes can maintain their market share. Economic moats, first coined by famous investor Warren Buffett, focus on companies with a strong brand, cost leadership, economies of scale, and high switching costs for users. Alongside its US moat ETF, VanEck also launched a small and mid-cap moat strategy. Outside of Europe, the firm said clients in Latin America and Asia were actively waiting for the ETFs to launch. Finally, BlackRock said in its full-year results it expects high growth rates in European ETFs, driven by the rise of model portfolio services. The prediction comes after the firm netted $71 billion of new ETF assets in Europe last year. However, analysts at JP Morgan questioned whether BlackRock could maintain its inflow momentum, particularly in its fixed income ETF segment. The world's largest asset manager is also undergoing a period of upheaval, with iShares head Salim Ramji set to depart after a decade at the firm. And that's a wrap for this week. Remember to subscribe to stay up to date with all the latest news in ETFs. Until next Friday, take care.